can do sort of at a slower pace. Here is my personal return from last year. That's the print off if any of you have an account, either a stock trading account or mutual fund trading account. You realize this is the little screen capture from what my fund did last year. Now, I did not have any particular fund in my account that achieved 70% or greater. The best performing fund I had in there was about 40%. But by capturing the gains that we have, for example, like right in here or right here, by capturing the gains and eliminating the risk, we actually had a better return on the investment than the actual individual market showed. The year before, I believe we were up in 2008, we were down about 5%. The year before that, we were up about 36 to 39%. The worst we've ever done was about 2004 when we were at about 22%, I believe. And so, for example, we've already regained all of the 100% of the losses from 2008. In 2009, we regained all of those back and actually started making progress again about October of last year. So we're ahead of where we were January 1st, 2008. So, and it's put my parents back on track and a bunch of other people that I know who've been using it for the last year or so. It's actually put them back on track. Now, let's take a look at a candidate for what makes or take a look at what makes a good candidate for trading with the system and what to avoid. There are two basic things that you want to avoid, and that is high volatility, and the second is cyclical price action. And so it is easy to spot. We've already taken a look at Mutual Fund Trader in action. What I want to do is actually take a look at the stock trader because it shows us some of these things in terms of what's good to avoid and also what's good to trade. So we bring up the, let me go back here. We bring up the strategies button. We're going to remove the mutual fund trader and we're going to add in the stock trader system. Just leave the defaults as it is. And NinjaTrader is going to say, even though we have order confirmation enabled, if we're connected to one of the NinjaTrader brokers that will accept my buy and sell signals for stocks and equities, it's going to submit those automatically, and it just wants to make sure that you know that as well. Here is a chart that we have for Apple Computer from earlier this year. And let's go over here. Let's see here. Here we go. And you can see that there are a couple of things to take note of. Number one, you see how relatively small the range bars are here. These are actually a daily information on the stock, just like it is on the mutual fund. So you want to have only daily information. You don't need hour bars or anything like this, just the daily information. But you see how relatively small the bars are relative to the size of the graph. That means that the daily volatility for this particular stock is small. And we also see that the stock doesn't go up and come back down and up and come back down very much. It just has small fluctuations in price. So whether it's going up or whether it's going down doesn't really matter. The program will take care of when you need to get into it, for example, right here, and when you need to get out of it. You know, back in about the middle of July, about July 10th, it issued a buy signal at 142. End of November, it offered a sell signal at about 190. So that was a pretty good 4 or 5 months holding there on Apple. Let's take a look, though, at one that is not a good candidate. Let's take a look at AIG. Okay. Now, if we back up here, you see how enormous these range bars are relative to the chart. Now, if you look over here, you see that the bars are smaller. Now, with these smaller bars, you have low volatility relative to the price. This is a good time to trade it. This other time here, when all of a sudden we got into really big time frames, not really a good time to trade it. It actually went through and made a profit on this trade. We got in at about 1830 and got out at about 40, so you would have more than doubled your money on that particular trade. I personally would have probably stayed away from this trade simply because the size of these bars shows that you have a tremendous amount of volatility. Now here, we were lucky in the sense that the volatility went in our favor. However, keep in mind that it can also go against you as well. Let's take a look at BAC. This one is a good one to show that it generated. I wanted to show you this one because it generated a lot of unfavorable trades. It had one here sort of at the beginning where we went in at 12, almost 13, got out at 17. But look what it did after that. It went up and down and up and down and up and down. That is a terrible price performance pattern to try and trade in any kind of systematic way. Now, it would have been very easy to trade this by hand. And here's what I mean to trade it by hand. Let's sort of go down and look at the bottom of this one right here. In September, if you would have, for several months in a row, bought it on the first day of the month and sold it about the middle of the month, the 15th, you would have made a profit. What about October? If you would have bought it on the first day of the month and sold it about the 15th, you would have made a profit. In November, if you would have bought it on the first day of the month and sold it towards the middle, you would have made a profit. So this is one where you could have very easily made a profit selling it by hand. But from the standpoint of an automated trading system, it's going to be very difficult for this kind of cyclical price action to keep up with. So as a general rule, I simply just stay away. I simply just avoid them because they're not very reliable, and there are lots of other